Welcome back to the Bankopedia. Today we are delving deep with a new subject, and it is private banking. We wondered how the super rich manage their fortunes. We're not talking about just having a savings account with a few extra zeros. We're talking about a level of wealth that requires a whole different universe of financial services. Today, we're pulling back the curtain on the exclusive, highly competitive, and often secretive world of private banking. So, what exactly is private banking? In simple terms, it's a suite of personalized financial services and products offered by banks to their high net worth individual clients. Think of it as a VIP, all access pass to the financial world. These aren't your standard off the shelf products. We're talking bespoke investment strategies, complex estate planning, specialized credit solutions, and even tax management, all tailored to the unique needs of one person or family. In some countries, such kind accounts are called privileged banking or personal banking. To get a feel for the scale, you typically need at least $1 million in investable assets to even get a foot in the door at most private banks. And for the top tier, exclusive firms, that number can easily climb to 10 million, 25 million, or even higher. It's a world where the fees you pay aren't a fixed monthly charge. Instead, they're often a percentage of your assets under management, or a UM. This means the more money the bank manages for you, the more they earn. This model is crucial, and we'll come back to why it's so important in a little bit. One of the defining features of private banking is the relationship manager. This isn't just your local bank teller. A relationship manager, or RM, is a highly skilled financial professional who acts as your single point of contact for all your financial needs. They build incredibly close, trust-based relationships with their clients, often over many years, sometimes even generations. Their job is to understand your goals, your family dynamics, your business ventures, and your risk tolerance inside and out. They are part advisor, part confidant, and part problem solver, orchestrating a team of specialists from investment gurus to tax lawyers to manage your wealth. This close trust and deep personal connection are the cornerstones of the entire private banking model. Now, let's talk about the industry itself. Private banking is a global powerhouse. It's incredibly lucrative and, as a result, fiercely competitive. Banks from Zurich to Singapore to New York are all vying for a piece of the same pie. The assets of the world's wealthiest individuals. This intense competition creates a high pressure environment. Relationship managers aren't just there to provide good service. They are under constant pressure to attract new clients and, more importantly, to increase the assets under management that those clients bring to the bank. Remember how we mentioned compensation? For most relationship managers, their salary and bonuses are directly tied to the AUM they manage. The more money they bring in and keep at the bank, the more they personally earn. This commission-based structure creates a powerful incentive to grow their client base and assets, which drives the competitive nature of the industry even further. It also means the RM has a vested interest in keeping their clients happy, which can sometimes lead to them acting more like a client advocate than a bank employee. They might push the boundaries to accommodate a client's wishes, fighting their corner within the bank's internal structures. This brings us to a more serious side of private banking. The very things that make it so attractive to wealthy clients, confidentiality, discretion, and personalized service, also create potential vulnerabilities. Following the 2008 financial crisis, regulators in the US and Europe began to scrutinize the industry much more closely, particularly concerning issues like tax avoidance and the potential for money laundering. Let's break down why private banking can be vulnerable. First, you have the high level of confidentiality. Clients expect and receive a degree of privacy that is unparalleled in retail banking. This is a legitimate service, but it can also be exploited. Add to this the culture of secrecy and discretion that is actively cultivated by relationship managers to protect their clients' privacy. This is a key selling point of the service. Then, consider the powerful clientele. These are often influential individuals with complex international business dealings. Their wealth isn't sitting in one simple account. It's spread across numerous jurisdictions, held in a web of legal entities like trusts, foundations, and private investment companies. A client might use these structures for perfectly legitimate reasons, like family estate planning or managing business assets efficiently. However, this complexity can also be used to obscure the true beneficial owner of the funds, making it difficult to trace the money's origin. Imagine a wealthy individual with businesses in 3 countries, personal properties in 5, and family members living all over the world. They might set up a private investment company in a jurisdiction known for its financial privacy. This company then becomes the legal owner of various assets. On paper, the client's name might not be directly linked to those assets, making it much harder for authorities to get a clear picture of their total wealth and its sources. When you combine this complexity with the close trust between a client and their relationship manager and the RM's commission-based incentive to keep that high-value client, you can see how potential red flags might be overlooked. The RM, acting as a client advocate, might be less inclined to ask tough questions about the source of a large, unexpected deposit if it means potentially losing a $1 billion account and the commission that comes with it. This is the central challenge for the industry and for regulators. How do you balance the legitimate need for privacy and sophisticated financial management for law-abiding wealthy individuals with the need to prevent illicit funds from entering the financial system? In response to these risks, global regulations have become much stricter. Banks are now required to conduct much more thorough Know Your Customer or KYC checks. They have to dig deep to identify the ultimate beneficial owner of assets, not just the name on the account. They must also have robust systems for monitoring transactions and reporting suspicious activity. The days of no questions asked banking are, for the most part, over. Failure to comply can result in massive fines for the banks, reputational damage, and even criminal charges for the individuals involved. So, while the core of private banking remains the same, providing elite service to the ultra-rich, the environment it operates in has changed dramatically. The competition is still fierce, the pressure on relationship managers is still immense, and the desire for confidentiality is still a key driver. However, this is all happening under the watchful eye of global regulators. The industry is in a constant balancing act. It must cater to the demands of its powerful clientele while navigating a complex and ever-changing web of international regulations designed to ensure financial transparency and integrity. It's a fascinating, high-stakes world where personal relationships, immense fortunes, and global regulations collide. It's far more than just managing money. It's about managing complexity, risk, and reputation on a global scale. Thank you so much for joining me on this deep dive into the world of private banking. It's a complex topic, and we've only scratched the surface. If you found this interesting, please hit that like button and consider subscribing for more content that explores the fascinating world of finance. Let me know in the comments if you have any questions or what other financial topics you'd like to see covered in future videos. Hope that we will meet in the next video in good health and learn something new regarding banking and finance. Thank you.